Hello there, traders. Welcome to today's live stream with me, John, market analyst at 𝖢𝖣yiy Markets. I'm going to take you through some interesting data, some interesting data coming up as well. That's not the one I wanted. Yeah, interesting stuff coming up very, very shortly in the markets. We've got Jackson Hole. There's been some big news in terms of jobs data revisions. We're going to have a little look at the 10-year bonds. And yeah, we're going to have a little look at what's been going on in the markets, essentially. If you have any comments, questions, let me know. But welcome. Good afternoon, Royston. Hope you're doing well. Hi, Harmy. Hi, Ratish. Hope you're all good. So the main topic of this week for me has been short in US dollars. But we've come up into a pretty significant level on the US dollar at the moment. And we were just waiting to I was just waiting to see how all this news started to come out. Let's have a little look. Let me just change. Just clear this. I'm just going to go United States for now, just to have a little look at what's going on. Hi, Vincent. But yeah, there was some big data, some really big data that came out. Let's go back to this week. Turn this down to a 2. Okay, so big data from yesterday. Let me get a pen tool out. Because this has started to bubble away pretty nicely. And it's going to make an interesting end to the week in terms of Jackson Hole, in my opinion. Hi, Bruce. Hope you're doing well. This number here, right? This is what I'm talking about, okay? My dad brought it to my attention yesterday, actually. Hi, Tabo. This is the non-farm payrolls annual revision, okay? And what we saw from the annual revision was a very, very significant drop, okay? Very significant drop. So you think that's your non-farm payrolls, right? Basically a year-on-year revision of where we were, okay? So previously was minus 187K, and they've just wiped off 800,000 jobs in the US, which is quite interesting. Now, the market didn't really move on this information, which was interesting to me. Okay, it was very interesting to me. Why? Because maybe they see this data as a little bit of lagging data, a bit of old data, essentially. But you can tell this has been a very, very talked about topic. It's all over Bloomberg. It was all over CNBC. It was all over sort of Yahoo News and everything. It was absolutely everywhere. And this was. I'm just trying to see if I can get the original data up for you by the Bureau of Labor Statistics. Let me see, 2024. Now, this data actually came out pretty late yesterday. It was actually half an hour behind normal release to retail traders. Many banks just ended up calling up the Bureau of National Statistics just to get the data ahead of the release, which was quite interesting. But what I'm looking at here is, so this is the Bureau of National Statistics. Okay, and this is the non-farm payroll employment revisions between over the month estimates for 2024. Okay, so here is July 2024. Okay, over the change in month, and you've got that minus 915 there, which is yeah, pretty crazy. So interesting to see that. Interesting to see. And to be honest, it prompted questions from me to ask, what are we going to do in this next cut? Okay, because the Federal Reserve are going to cut. They're going to cut in September. But how is the market feeling about this? And it's only changed ever so slightly. So at the moment, the current rate in the US is 525 to 550. Now a 71% chance. And I looked at this yesterday to see how this had changed slightly, and it has changed a little bit from today to yesterday. So a day ago, there was a 62% chance of a 25 basis point cut and a 38% chance of a 50 basis points cut. So that data did shift the market slightly, but today we're starting to see that pricing a little bit differently, still into the 70s and a 25 basis point. And I think that's what the Fed will do in September, 25 basis points. But there seems to be a little bit of a, what would I say? Divergence between the data that we're getting in the US and how the market is performing, right? I expected US dollar weakness, don't get me wrong, I expected dollar weakness, but with a labor market that's becoming under pressure, how is that going to then be influence the stock market, right? And we're seeing stock markets move into all-time highs, and that just really interests me, because I just think there's a little bit of a divergence going on here between the numbers that we're receiving and the way the market feels it's moving. Like, the market is very much risk on at the moment, which I don't think it should be, but hey ho, we've got that sort of move coming in the markets at the minute, which is just super interesting if you are interested in sort of looking at the data behind the markets. And you know, looking into November, they're looking at the rate between 475, 500. I mean, in November, they're pricing more of a opportunity for a 50 basis points cut, which is very significant within the market, very significant. And then December, they're expecting it to come down even further. So 3 cuts is what the market's trying to price in at the moment. I think if they get disappointed, that's where the opportunity is going to be as a trader, especially looking at things like the US stock market. So I'm sorry, I'm just put it on a different screen earlier. So this is the US 500 at the moment, or the S&P 500. And you can see that the market is very bullish. Okay, very bullish. We came into the 200 daily moving average and had a significant spike to the upside. And sentiment's not changed here. And this is why I think it's really interesting in the markets at the moment, because sentiment has not changed. Market has just continued to trade higher, despite, I would say, data not particularly going in the way or the favor of the market. So these market conditions is where I guess technical trading really performs better than macro trading in a way, because you're just following trends at this point, and the market is following trends pretty nicely, especially when it comes to the US dollar. This is something that we've liked for the past few weeks now. Price just breaking through multiple levels on the weekly chart, and you know, the low that we're kind of heading into now was the one that formed in December of 2023. So the lows of 2024 are now new lows. You know, the lowest low of 2024 was 100.90. But we're in a demand zone. We're in a bit of a demand zone here. So am I selling US dollars now? Absolutely not. Okay. And the reason being is because we're coming to the end of the week. We do have some data coming out today. I believe the manufacturing and services PMI is coming up. We've had unemployment claims come out, which I just think honestly, I think they're lying. I don't understand how the market produced a 232 on the unemployment claims, slightly higher, don't get me wrong, than 228, but I don't see that happening. If we're getting such big revisions on the job market in general, you know, how are we getting those types of numbers? You know, we've missed forecast the past couple of sessions, so maybe they just wanted to print one as forecasted and then they'll revise it later, which is what I'm thinking. And if you look at the unemployment claims, and I always say you want to look at the trend, right? You want to look at the trend, and you can see if we were to put like a moving average on there, the market would definitely be heading higher in terms of those unemployment claims. We know the unemployment rate is moving higher in the US as well, but I just think something's bubbling here. I think something's bubbling. Hi, Irfan. Hi, Matt. Let me know your thoughts. What do you guys think about the US economy at the moment? To me, I think it's when someone just tells you a load of stuff and then they go, "What do you think?" You'll be like, "Well, I think that's bearish," but the economy's shrugging it off at the moment. Whether it's waiting for a bigger catalyst to come, I don't know. But we do obviously have some important data coming up. And I think we've got obviously the manufacturing PMI, services PMI. Services PMI is going to be a big, big one to watch. Obviously, last time we beat estimates, went up into the 55.5s. If we'd see any kind of downside here in services PMI, then that could compound a little bit of dollar weakness here. But yeah, Matt, you've summed it up perfectly there. Economy is all over the place. There's something it's not sitting well with me. Typically you follow the data and this data to me would be very bearish dollars, which is right. Market has been bearish US dollars, and happy to continue to sort of follow that path for now. But we're not really seeing that reflected over in the sort of stock market. Now, typically when a currency does devalue, stocks tend to go the other way. But I just thought that maybe the market is trying to price in aggressive 3 cuts by the end of the year. And I don't know whether they're going to necessarily get it, because the data's not been poor. Obviously, that revision data has probably changed my mind a little bit on this, but yeah, with GDP data has not been too bad. Whether that's been falsified as well. Inflation is still okay. It's not in the areas that you need to see, but we're going to take a look at something. We'll take a look at something in a moment, and we'll go from there. But big data coming up, and Fed Chair Powell speaking tomorrow, 3 p.m. I wouldn't be trading around this point, put it that way, because his remarks are now going to be looked at very, very closely. CPI data as well coming out of Japan. Please keep that in mind if you are trading Japanese yen at the minute. Be very, very aware that there's CPI coming out. I think any kind of significant rises here, so it's already forecast to come in a bit higher, 2.7%. But if we see it jump above maybe 2.8, 2.9, even the 3% would be pretty big here, because it might prompt further hikes from the Bank of Japan. So if you do see any kind of more hikes or more sort of higher numbers from inflation in Japan, be aware of that one, because that really did kick on a little bit of risk sentiment in the market as well, which we saw that sort of couple of was it Monday the 5th of August, I think it was, where we had that sort of big move in the market to around the 5th. So yeah, the market's just gone sideways since then, to be honest. So we're not really seeing a lot. And sideways markets can be, especially when I'm talking about the yen in this instance, a little bit sideways market on the Japanese yen. But this is going to be pretty big. Jackson Hole, going to get Fed Chairman Powell speaking. That's going to be watched very, very, very closely, I believe. Yeah, Matt, I agree. Or Bruce, yeah, I have to agree. Something going on. Very conflicting data. Inflation going up slightly, but other news conflicting. Yeah. Irfan, something cooking. September is coming off, and it is generally risk off. Yeah, you make a good point there. I'm just going to bring in some seasonal analysis, and we're going to take a look at indexes. And we're going to take a look at the US dollar for one, and then I'm going to come back in, and we're going to take a look at I don't want US stocks. I want the indices. Let's see if I can get the S&P 500 as well. Typically goes for a little bit of a bearish spell through August and September, but not really seeing that right now. Let me see if I can get this up. US Treasury bonds Do they go for a bit of a seasonal topping? Right. Okay, that's quite an interesting chart. I've not actually seen that one yet, so maybe we'll talk about that in a second. Let me just grab something over here. Because bonds, US Treasury bonds are through the roof right now. And typically, in the end of August, September, we can see quite an aggressive dip. So US Treasury bonds, one to watch, actually. Right, let's just have a little look at the US dollar index. Obviously, dollar index not really following too much of a seasonal plan right now, although over the past 37 years, it's got a 51% correlation between this year's price. We've got over 20 years, we've got a 55% correlation. It's minus 15 when it comes to the election. And obviously we are in an election period. But through sort of July, we do often see a bearish period for the US dollar. And that's exactly what happened through July. However, this time we've had a bearish August. So I wonder if we just use this little tab over here. Now, I don't use this too often, but I'm going to have a little look. What if August is negative? What do we typically see in those periods? So if August is negative, usually we have a very sharp decline in July as well, but we can often see a little bit of a bottoming coming in September, which is something to consider. If we look at where price is now for the US dollar index, then that's going to be something to look out for, potentially a little bit of a bottom coming in the start of September, end of August for the US dollar, which kind of makes sense with the price action that we've seen in the markets, right? That would make a lot of sense to me, that we would see a little bit of a bottom and maybe a little bit of profit taking could be included in that. But typically that can lead to only a very short-term rally before seeing a very sort of sideways bearish market for the US dollar for the rest of the year, which is quite interesting because we've also got a 90% correlation with current price and how price has been performing in that view. If I just take off the 20-year there, you can see the correlation that we've had with this year. So the current year, which is green, and the custom, which is basically if August was bearish, how would that look? And that's then painted how the US dollar typically performs in those moves. So look at that. I mean, usually we see still quite a very bearish US dollar. If anything, it probably would chop around a little bit. November typically is usually a good month for the US dollar because it's the election for this year. And yeah, still was waiting on that big play, but things have turned quite drastically over the past couple of weeks. So we'll see if this does continue to sort of play out there. Matt, to trade DAX, US 30 and NAS fundamentals, would you use them to trade instruments, John, in your opinion? It depends what you're trying to do. Are you trying to swing trade them or are you trying to day trade them? I think when it comes to day trading, you probably just need to be more, obviously you need to be aware. And obviously a higher time frame bias to me makes a lot more sense. So if you had like a bias fundamentally, then I'd be trying to follow that. But the problem with that when you're day trading is obviously you can make money both on both sides of the move, right? So I just find day trading, you're better off going with the overall bigger picture, and you want to just try and find higher time frame levels to do that business around. So nothing really would change for me when you're looking at that. I mean, you can look at lower time frame strategies and just kind of trade it. But in that case, I just think you might as well have an EA. You might as well have a robot doing it if you're trying to try and trade a strategy over and over and over again. And you might as well try and get something that either does it and then maybe try and, I mean, these days you could probably get a hold of things like machine learning and AI stuff that would kind of put other things into it. But I think that takes a lot of time and effort. JD, good day. Why are you doing your own currency strength meters? Most brokers and other sites do it anyways on a weekly basis. Do you mean as in like, why do I do my own and not Blueberry do one? Or do you mean just like, why do I do my own? Because mine is based off of trend and based off of manually looking at the markets. And I do that because, one, it's habit. I've got into the habit of doing it. Two, it helps me focus on the week ahead of where I want to be doing business with the market and not trying to go here, there, and everywhere. You know, sometimes I do go here, there, and everywhere because I look at other fundamental stuff that can kind of drag me into those places. But yeah, I create my own because it's something that I started to do to try and focus in on opportunities for the week ahead, and haven't moved away from that since, to be honest. I've just been tracking it on a week to week, and also helps me to, you know, talk to you guys about opportunities in the market that I feel there. But ultimately I created it because I needed something for myself instead of having to just look at technical analysis all the time. I always focus on why you want to be in a position rather than, you know, just going to technically to trade it. I always think about, well, why am I going to go short or why am I going to go long here? You know, like this week has been very much focused on short in US dollar. Okay. And that's been good this week. You know, why? Because the dollar is a very weak currency. We've got fundamentally a good insight that the dollar could be weaker. And then you just go and try and find markets that are stronger. So, you know, I've been pound US dollar long this week. Should have been euro dollar long, but I didn't take anything there. What else have I been? Dollar CAD short, obviously, I've been recently, which hit targets, and I haven't touched since because we're trading around the 136 handle. So, yeah. I kind of make my own. But Blueberry doesn't offer anything like that just yet. So yeah, hopefully that answers the question. Yeah, day trade will hold the moves, though. See momentum. Yeah, it depends what you're doing on those stocks. I think if we get a big correction in the stock market, you know, like a really big correction, then that would be not necessarily unlikely to happen, right? There's been recessionary figures going around and talk for a while. I think that we're just going to see maybe a little bit of a correction again. We obviously had the correction recently, and I said, you know, is that correction or recession? And I said it was more likely that was a correction. That was right in terms of the fact that the markets recovered quite quickly from that. But I think the same will happen again if we have some kind of big crash in the market. I do think that we will recover pretty quickly. It just depends on how big it is, you know. What was I going to look at? I was going to look at if the bonds were correlated with the equity market at the moment. Or whether it was positively correlated. And I think it's positively correlated at the moment. Because correlations can change. But I'm just trying to see if there's an actual... what have we got down here, actually? Euro FX. Let me go to the bonds. Sorry, treasury bonds. 10-year notes, 5-year, obviously. Swiss franc, Japanese yen. Oh, that's quite interesting. Swiss franc, Japanese yen. 94% correlation with the US treasury bonds. Swiss franc, 94%. So we're going to expect a little bit of a top here on the US treasury bonds. Could we look at a top in the Swiss franc and the Japanese yen, which kind of makes sense if we look at COT reports at the moment. So COT reports at the minute are showing a potential short signal for the Japanese yen. So, you know, we've talked about this obviously in the past, where we've had this kind of upward tick in Japanese futures, but we've got this kind of sell signal coming in. Now, typically when I look at this, I want to be looking at obviously extremes that occur within the markets. And when we do get those extremes, how does the market react? Now, the move in the yen was quite substantial because it kind of unraveled a lot of things. You know, we haven't really seen the Bank of Japan hike for a very long time. So I can't remember when the last time the Bank of Japan actually hiked interest rates. Let's have a look. Japan. Let's go to the interest rate, and let's go to max. So pre-2008. Oh God, that's ominous, isn't it? Pre-2008 is when we started to see a move in the hike. That is actually quite scary. When was that as well? 2001, 2002. What happened to the stock market in 2001, 2002? Might get our own little recessionary indicator coming up here. Let's go back to the S&P 500. Let's just zoom out on this weekly chart. I haven't got the data. That's annoying. What if I go to the futures market? I'll have the data on futures. Bonds, futures. Do not have S&P. Why do I not have? Yeah, I do. Here we go. How far can we go back to here? 1998, 2000, 2001 was quite bearish for stocks as well. (2001 to 2022) was quite bearish for stocks. When was the other time? Yeah, I just wondered if there was a negative correlation between the Bank of Japan hiking interest rates and the stock market. Yeah, we had 2000, 2007, 2008. That was 2001. Don't know what happened in 89. I've not got the data to see that. Can I compare anything on top of here? Won't let me compare currencies, I don't think. 2006 to 2007. That was obviously before the crash, right? 2006, 2007, and the peak of that mid 2007 to 2009 was the recession there. So that's quite interesting to note. Look how far the market's gone since then. When I started trading, could have easily just bought the S&P 500 and just held that. What is that? 191%. Would have been a genius. But yeah, that's quite interesting to note. Just a little side view there of having a little look at how sometimes when we get that hike in interest rates from the Bank of Japan can often lead to a bit of a bearish move there, but there's not enough data to really take that seriously. What's your views on pound CAD? My views on pound CAD have changed a lot. Obviously, we talked about short pound CAD when we were looking to short pound in general down at the 131s. I actually gave back a load of profit on this, which I was quite disappointed in. So this is where we were looking to short. I ended up shorting a couple of times on pound CAD. I was short here. Pretty sure got short on the break there, and I ended up taking a short here as well. So this one was taken out for a loss here. I lost this trade on that one. And my target, so basically my target was 174. So that was my target. And I missed out on it by a few pips. So the low of that candlestick was 174.08. Yeah, so it's about 8-9 pips that I missed out on take profit there. So I got short a couple of times in here. This was all based off the fact that we wanted to be selling pound for the commitment of traders and buying CAD from the commitment of traders. So we did that. Market came down. Should have really took profit when we got into this little demand zone on the daily. But, you know, I didn't and ended up giving back a load of profits. I think I came out with like, I won't even say 1%. I think I've come out with less than 1% on this whole move, which is crap, really, considering the good trades that I did take. But pound CAD is moving to the upside at the moment. Obviously, this is more driven by, I think, what's going on in the pound rather than what's going on in the Canadian dollar. Because if we go take a look at the Great British Pound, obviously at the moment, it's still rallying to the upside. Market has come up into the 131.25s now, which is a very significant level on the weekly chart. So these previous weekly highs back in July, where we saw a lot of downside pressure, this is looking very bullish to me. A lot of, if we just have a little look at some monthly charts, we're starting to see some very bullish patterns. This is why I think the US dollar is going to have its you know, continuation to the downside as well. You know, we talk about patterns a lot and how the market can form these patterns. Now, this to me is a very bullish pattern. If I saw this on a 4-hour or an hourly chart, I'd be long in this market and I'd be looking to try and take it up to the next levels of sort of support and resistance, up towards the kind of, you know, 1.4s maybe, and around this kind of area here. So that would be where I'd be looking to target. So maybe we're going to see a lot more upside on the pound. Just to flip that though, dollar CAD is at support, right? It's at that 136. That was the target for us in and around that area there. So when you've got a market or a major like the dollar CAD at support here, you know, if you want pound CAD to trade higher, you want this to happen. Basically, you want pound to be breaking through resistance levels and you want dollar CAD to be finding support. So if you do want to see that move higher there, it has moved a long way though, right? Very similar to what we had that couple of weeks of pullback, but we're in this bullish upward trend on the weekly. I was just wanting to see it dip a little. Well, I wanted to see it dip 9 pips lower, which is stupid really, but market's made its move to the upside now. We're back into these kind of previous highs. This is why I like trading higher time frame stuff though. Look at the opportunity there for price to come all the way up into the 183s. You know, this weekly chart looks very bullish to me. It looks very bullish. We've had a nice trend since sort of April, really. You know, that to me looks fairly bullish in my opinion. So pound Swiss looking good. Pound yen, pound CAD, pound Swiss. Jeff wants to have a little look at. Yeah, the Swiss franc's an interesting one. You know, I've got a couple of seasonal plays that could suggest that the Swiss franc could be a little bit weaker. Obviously, as well, if we just take a look back on those Treasury bond yields, where we're expecting maybe a little bit of downside to come into the Treasury bonds, then the correlation between the Swiss franc is 94%. So maybe we could start to see a little bit of weakness coming into the Swiss franc. This is really all going to depend on that risk coin that we keep. It seems to be flipping on a daily basis. If we go take a look at risk in general, what is the VIX doing? Still on the decline here. Still moving lower. So it looks to me like the market is favoring a lot of risk off right now. And if that were to continue with the VIX coming back down to the 12s, I think you'll see dollar weakness still. And I think you'll see the likes of the pound doing pretty well. Commodity-backed currencies will probably do well as well. Aussie, Kiwi, CAD. And we'll see some weakness in the Swiss franc and the Japanese yen again. I think if we continue to see this volatility move lower. But I just want to get Jackson Hole out of the way, get the Fed speech out of the way, and see what they're coming up with. Obviously, then that rolls into the whole picture in September. But having a little look at pound Swiss from a technical, looks like it's on a pullback here on the weekly. Daily's looking pretty bullish. Yeah, I don't know whether I like it as a trade. You know, let's have a little look at the currency strength meter. don't think pound Swiss. Yeah, they're on the same side of the table, so I don't typically trade that if it's on the same side. We could argue that Swissy and yen have been in these reversal areas for a while. So we have a little look at the strength meter. We're kind of in that sort of reversal zone. I don't know why Swiss is not updated on there. Have I put Swissy in wrong? 5 and 7. Why is that not updated? I only just realised that. Swiss pink line. Oh, because it's +5. I was looking at -5. This is +5. Yeah, they're up here. Sorry. Brain just died on me there for a second. Yeah, so yen and Swiss. So that's the Japanese yen. I mean, I probably need to label these. Swiss franc up in here, up in those reversal zones. So if we do start to see any kind of, downside pressures in here, that could be quite interesting. Obviously, the Australian dollar was one of the best performing currencies recently. Kiwi had a little bit of downside last week, but it seems to have rebounded from that. So, that's quite interesting. CAD, the green line, came down a little bit, but has been on a bit of a positive trajectory. Obviously, dollar the weakest. So, we're in kind of I'd say like a bit of a no man's land right now with the currency strength and weakness. Like I said, the only thing I really liked this week was US dollar downside. So that would be buying euro dollars, buying pound US dollars, buying Aussie US dollars, selling dollar CAD. That's the only ones that really came up for me in terms of the currency heat map. The rest are just preparing to potentially do something, but they haven't done anything. If anything, they've been a bit rubbish. The only good one, I think, was Euro Swiss, and there was a seasonal play on Euro Swiss as well to the downside, which has started to come out a little bit. But other than that, it's just dollar. So yeah, I took Euro CAD long yesterday for a good 30 pips. Still looks good for longs if it stays above 151. Yeah, potentially. I mean, the Euro. Oh, got alerts going off. What's that? Swiss yen. Euro is interesting. Let me turn that alarm off because we did get poor manufacturing data out of Germany again today, and the market's just kind of shrugged it off. It's obviously the dollar's just the dollar is just the dominant currency right now, and you can see that across the board because what you would look for if a currency was really dominant. So I would say the pound is a dominant currency because if you look at all their pairs here, pound is very bullish. If you look at sort of euro pound, it's bearish as well. So pound is a very, very strong currency. Now, if you differ that with the euro, right, and the pairs of the euro, it's stronger than the Australian dollar right now. It's weaker than the Kiwi dollar, weaker than the Swiss franc, weaker than the pound, stronger than the Japanese yen. So it's showing you the Japanese yen is a weak currency, and obviously is a little bit weaker than Euro CAD, so the Canadian dollar there. So when I come to a chart and I say, look, do I want to be involved sort of buying Euro? I want to look at the overall, how it's performed against the most of the majors, and it's not performing that well. So maybe you like the idea fan of being long Euro CAD. That's absolutely fine. The trend here is positive. You like it above 151. Yeah, great. This looks quite bullish. It's just not a market I would particularly go and look for. But I've only been looking at dollar pairs really this week. So bit of a resistance here though. 151.34s. See, there's a bit of a resistance there. But I have to wait and see. What else has been on my mind this week? Gold's had a bit of a pullback. Gold has had a bit of a pullback, which is surprising to me. I thought that once we got that break out of the 2480s, I thought we'd see a little bit more upside. Even this little break here on Tuesday, that little short-term move higher. So that's an interesting little watch on gold. So keep an eye on gold prices. Will we get gold closing back within the previous sort of range highs, I'll be keeping an eye on that, because you don't typically want to see that, obviously, if you do want to be a continued trader long. I still feel like gold prices are going to stay bullish. It will need to pull back at some point, though, right? And look at this monthly chart. We're definitely, I would say, overextended, but we've been on these kind of runs before. That was a 77% move higher. So we're not really anywhere near that. So it could still go a little bit of a way. Let me just have a little look at that leg there. 40s, 27s, 40s. Yeah, it's looking a little bit overextended to me, gold, but we'll have to wait and see how this one performs. I still feel like there's upside because the commitment to trader reports isn't necessarily showing that. But it looks fairly bearish from a day trading point of view, I'd say. Daily chart closed pretty crap yesterday. I wouldn't want to be buying off of that move in there. So look at silver. I love silver, idea of silver but longs at the moment. We just haven't got the price action there just yet. I want to see a pullback. I want to see a pullback into sort of 29s or 28s. That's what I'm kind of looking for on silver. I like that. Let's have a quick look over in oil, because oil markets came back into the swing lows again. $72. Which I was looking to see, would it kind of break or bounce from this little bit of a zone in here. So keep an eye on your oil prices as well, because that's going to be interesting. 10 years back into an area, 3.8%. 2 years as well, back into an area. So this is why I feel we might start to see a little bit of a retracement maybe to the US dollar. If I just go here and we put the US dollar currency index over the top. Let me take some stuff off here. Just delete the drawings and put this on to new byte scale. You know, the US dollar index and the US 10-year have a very good correlation within the markets, and obviously the US 10-year started to kind of show some moves lower as well, and you know the dollar index fell in line with that as expected, and now we're starting to come into a bit of a low. So if you look at the 10-year, we obviously had these lows in here in the past. So maybe there's the dollar index. So maybe there's a point that if we start to see the 10-year bottoming out a little bit and start seeing a move higher, then maybe the low in the dollar index could be about to form. So that's something to take into consideration going forward. Obviously, that would be a little bit up here in terms of the weekly on the US 10 years. Me too, yeah, waiting for gold. Silver, sorry, yeah, I like silver a lot. You know, if we look at the monthly chart of silver, you know, that looks really good. That looks really, really good for some opportunities to the upside. So we'll see if we get that. We'll see if we get that play there. Just having a little look across the board. I can see Aussie's pulling back a bit, actually. Dollar Swiss still continuing a little bit lower, but Aussie's on the pullback. Pound still strong. So maybe pound Aussie would have been a good one to have a little look at in terms of longs recently. A little look at the daily chart. Yeah, that's been doing pretty well. Pound Kiwi was on my list to go long this week, but it just wasn't setting up the way I'd want it to set up. But we have seen over the past couple of days that there has been some bullishness in this market, but it wasn't, the conditions weren't there at the time to warrant me wanting to trade this week. But that's definitely something to take note of. Dollar's having a little bit of a push up right now. Let's have a little look at the dollar index. So I'd see a little bit of a move coming in here, which isn't, again, it's not unexpected because we've had this big move to the downside into this level. So we've got actually data right now that I've completely forgot to talk about. So let's have a look, see if it's come out yet. Would it be the manufacturing PMIs, wouldn't it? Services PMI. Services PMI 55.2. Was expected to be 54 though. But another sort of sorry, that was a down from the expectations. We've got one revised lower here, revised from 56 down to 55. Manufacturing PMI, which I'm not particularly bothered about in the US, below 50 again for the second sort of month in a row. But obviously the US is more of a service-based industry, so a service-based economy. So you want to be looking more at your services PMI. 55.2 there. Okay. I just don't believe any of the data that comes out at the minute. Don't believe any of the data that comes out. What other markets was I interested in? I think that was about it, but I'm going to leave it there, guys. Not really much going on for me at the moment. Obviously, I want to be short US dollars, but the US dollar index is at support, so I'm not doing anything. If I want to be short US dollars now, I want to see price kind of pull back into sort of 102s. Maybe then I'll look to try and get short in around that area there. I will try and have a look at the correlation between the bond yields this year or the treasury bonds and the equity markets to see if there's a positive correlation there. Usually there can be a negative correlation. So, but I need to put them side by side, really. I don't know whether I can do that on TradingView. Here we go. Treasury bonds. You got the iShares that you could use. US Treasury bond futures. Let's have a look. Let's see if I can put like I mean, this isn't typically what you would do because they usually are negative correlated, but I just wanted to see how they were correlating right now. I've never done this on TradingView before, so let me just go to pin scale to the right. Because look, this is what I mean by sort of negative correlated. You know, when you get the bond yields, treasury bonds, I keep calling them bond yields, sorry, treasury bonds moving lower. You have the uptick there in the S&P 500. But we're starting to see sort of a similar correlation in terms of bonds, treasury bonds moving higher, and so is the S&P 500. Okay, we'll see. We'll see what happens with the data coming out tomorrow. I would say. I think I'm probably going to take the rest of the week off in terms of trading wise. Probably not going to touch it. Going to see how the market plays out in terms of some data coming up. So we've got inflation data coming out of Japan tomorrow. Be very, very aware of that. Okay, so just be aware of that. We've got some retail sales coming out of Canada, but I'm not really focused too much on that at the minute. Like I said, I'm very much focused on how the US dollar performs. Fed Chairman Powell speaking as well is going to be a big, big one. So keep your eyes on that, guys. Stay safe in these type of market environments. Can be a little bit tricky. It's okay to just let the dust settle and go from there. So I'm going to leave it there, guys. Thank you very much for joining the stream. If you did like it, please leave it a thumbs up, and thumbs up from Royston. Thank you. You're welcome. And I will catch you all next week. Yeah, next week. Yeah, I'll catch you all next week, and I'll speak to you then. Have a great weekend. Cheers, guys.